Hi friends, welcome back to the channel. I want to go through some headlines and keep you informed. The first one is actually Unity, the popular software package. They're laying off 25% of their staff, so that it results in about 1,800 employees. And unfortunately, this has been a trend happening in tech to where a lot of these companies had really rosy projections of the future going forward. But unfortunately, that didn't pan out for them. And essentially now they have way too many staff and have to make cuts. Moreover, I was looking at this. This is one of the bubble stocks the last couple of years. Was trading around a couple $100, currently at 35, so it's really taken a hit there. And moreover, I was looking at their financials. So the blue bars here, if you guys can see, that's your revenue. So the revenues are increasing. I can see that, right? The problem is their losses are also increasing, so not so great. And essentially, they had to come up with something. And this is not just Unity. A lot of companies have charts that look like this. In the era of free money and rosy projections, right? You think, okay, I'm just going to spend a bunch of money to make money. But the problem is when, you raise interest rates, also too, when the world economy slows, the buyers aren't there for your products anymore. And, it's just unfortunate situation for the people who are affected by this. So hopefully everything's going okay in your neck of the woods. I point this one out because as we go through some data in this video, regardless of what national and international data says, it all depends on your particular situation, right? So always look out for yourself first, but do understand what the macro environment is offering and kind of put it in perspective. In terms of inflation in Europe, it's been going up a bit. We can see this here. Eurozone inflation rebounds in December, fueling rate cut debates, meaning that if inflation's not beat, we shouldn't be talking about cutting interest rates. The Fed, one of the Fed people, Bowman, was saying, hey, maybe we're not going to hike anymore, but why are you guys talking about cuts? You be crazy. Moreover, we're going to get a read this Thursday on the CPI data from the USA, and the forecasts are expecting the headline inflation to be going up. So the numbers are going to be, this is coming from December. November, I guess they were saying the headline CPI was 3.1. The forecast is that the headline CPI is going to be 3.2. I've told you guys this before several times. When we talk about inflation cooling, it doesn't necessarily mean that you're near a neck of the woods that everything's going down in price. It just means that the acceleration is slowing, but things are still going up. Now, core inflation may slow to 3.8 from 4, but I'll let you guys decide if you think things are still expensive or not. If you know the difference, headline includes food and energy. Core strips that out. In our neck of the woods, we go to the grocery store every day. Food is still really expensive, and so is energy. And this is something that we were actually talking about during the holiday. We're just asking everyone, how much are you paying for heating these days? And we're all like, oh my God, things are too expensive. Moreover, I'd be curious your guys' thoughts on your Christmas shopping. Did you think things were expensive or not? Just, curious your thoughts. I just did a quick Google because I was kind of curious. I don't have an Xbox, but I was just thinking, if I was a kid, I'd be totally about Xbox and Xbox games, etc. And they were saying here the range for Xbox game prices is from free to $69.99, so basically $70. And then I guess if you want to get your Game Pass, it's like $17 a month. It's funny because I remember there was a time, I think Game Pass when I used to have Xbox was more like maybe 10 or the 15 in that range. And I remember like games above 50 used to be expensive, but I guess these days games are 70. And I forecast, this is just, it's not like a difficult forecast to make, but I'm sure we're going to be seeing $100 games coming in the future. I don't know how soon, but I wouldn't be shocked in these kind of things. And prices go up on this stuff. Talking about prices, which is also interesting, and I like to give you guys lots of data to keep you informed. What's going on with the housing market? So CoreLogic put out some really interesting data today. First is where are we now? So we're talking about housing prices. So year over year, we'll say, okay, we're up, say 5.2%. And then they're saying they're looking at next year, maybe 2.5% increases. And as I always tell you guys, it all depends on your neck of the woods. So this is a national chart of real estate prices year over year change in the USA. And you can see certainly some states go up in price more than others. And this is, again, the housing market. So the red tends to be 7+%. That's the dark red. And then the blue are the states where prices are still going up, just not as fast as the other states. This is actually really interesting and more particular. It makes it more clear. These are the top 10 states for housing prices increase. So Rhode Island coming in number one. I used to live in Rhode Island. I can tell you it's not cheap. Connecticut, I used to drive through Connecticut all the time. I can tell you, not cheap. Jersey, I don't have as much experience in Jersey, but I do know Jersey's been in a bubble. Essentially, a lot of people from Manhattan were just moving across state lines and driving prices up there. And if you're in Jersey, you'll know stuff is not cheap. New Hampshire, I used to live up there, actually, true story. And it was not cheap. Wisconsin, I used to live there as well. I lived a lot of places, and that's going up in price. So that actually used to be cheap, but maybe not anymore. Vermont, Michigan, Missouri, Ohio, and South Carolina are also going up in price. So those states tend to be cheaper. That's just how it is. But this is a reality, actually, true story. South Carolina, I think it's Charleston is a metro area. Those prices have been going up like crazy there. And then the prices in Detroit, Michigan, are actually accelerating by I can't remember what I said. It's more than 7. It's like 8 or 9 or something like that. But it's actually more than Miami even. So Detroit is the hot area right now in terms of home prices. This is another chart. It doesn't include Detroit here, but you guys get this kind of sense of where the sort of, I guess, if you want to call it bubble, you can, or overpriced, you can, or we'll just say prices are still accelerating. Miami, though, is one of the leaders here, but I told you guys before, Detroit's also up. San Diego, LA, Chicago, Boston, etc. You guys know these places if you live in these areas that it's not cheap. And this is the headline. It's kind of interesting, though, right? So Detroit, they throw in Miami as the fast appreciating housing market. Moreover, which is really interesting, is this is according to CoreLogic. Which one of these markets is in a bubble and has a risk of a crash? So according to CoreLogic, this is the top 5. 4 out of the top 5 are all in Florida. It's not a surprise, actually. I mean, just prices have been going up by leaps and bounds. So number 1, and I'd love to hear from people in Florida if you're familiar with this area. Palm Bay, Melbourne, and so it's also Titusville. That's the number 1 where there's a risk of a decline or crash, however you want to say it. Number 2, West Palm Beach, Boca Raton, and Delray Beach, right? So again in Florida. Number 3, Tampa and the St. Petersburg area. That also includes Clearwater. And also number 4, Daytona Beach, and Ormond Beach, again, all in Florida. So these are the top 4 that there's a risk of a housing decline. And then number 5 coming in the Atlanta area, and that would be Sandy Springs and Roswell. So love to hear from people who are in these areas. Do you agree or disagree that there's a possibility that, like, oh my God, we're in a bubble and it could go down? Also, the World Bank is projecting that the world economy will slow. They have this kind of funky headline. I'll read it to you guys, but you'll see what I mean by funky. Global economy set for its worst half decade of growth in 30 years. That's according to the World Bank. I know the way they word it is like half decade. Okay, so you have a 5-year period that may have a slow amount of growth. They also talk about the next decade coming to be essentially, I think they say, was it lost decade? I think is what the word that they're using in this article. But we'll read through it together to get the actual numbers that they're projecting. The global economy is on course to record its worst half decade in growth in 30 years. Global growth is forecast to slow for the 3rd year in a row in 2024, dipping to 2.4 from 2.6. Again, this is world growth, and that's in comparing 2024 to 2023, right? So from 2.6 to 2.4, and then also saying there here, growth is then expected to rise marginally to 2.7 in 2025, and that's below the 2010s. Moreover, this is sort of the things that they say are the risks. You have war in Eastern Europe, Russia invasion, right? War in Eastern Europe, Russia invasion of Ukraine. You have a serious conflict in the Middle East. Escalation of these conflicts could have significant implications for energy prices that could have impacts on inflation as well as economic growth. And the bank warned that without a major course correction, the 2020s will go down as a decade of wasted opportunity. Moreover, this is sort of the projections based on a regional basis. So they're saying here, growth is set to weaken most in North America, Europe, Central Asia, and the Asia Pacific. So this is where things are going to be slowing, and this is essentially because of slower growth in China. If you're looking for growth, it says slight improvement in forecast for Latin America and the Caribbean coming off of low base, while more marked pickups are expected in the Middle East and Africa. So that's sort of what's going on, guys. And the reason why I show you all this stuff and I start with the Unity situation is because, you know, this is kind of why I try to give you a holistic picture of everything, right? We look at everything and I say, hey, you know, if you got a great job now, you know, you're making a couple $100,000 or $1,000 a year or whatever. Hey, if you want to buy a Cybertruck and you can pay cash, go crazy, right? Knock yourself out. But if you got a great job, but you know, you don't necessarily can pay cash for like said things, you just don't know when you could get canned at any moment. This is a real thing. That's why I show you the Unity headlines, because I'm sure there's people there that, you know, they you know, got a great job. They said, you know what, we're going to get this really, really nice home because things are going to go like this forever. We're going to buy this really nice cars, etc. And suddenly they wake up one day, their boss calls them and they're like, you know, things are just not looking so rosy. We're accelerating our losses and our forecasts aren't so great. We're not getting the orders in from China, etc. So this is kind of why I want you to be thinking about your particular situation to protect yourself and not overcommit. Generally speaking, living below your means and understanding sort of like where the opportunities are will help you out immensely. And that's sort of what I try to do in this channel, to just keep you all informed of what to expect. So anyway, I do appreciate everyone's time, and I'll catch you in the next video.